Welcome everyone to HueFin News. Today is October 21st, 2018, the home of the 2-minute price prediction, as well as give me all the news according to the charts. And what we have today is an article by Market Watch telling the reader that it's time to buy the Chinese internet giants. Now we're going to go ahead and dive into this article and see whether or not it correlates with the price charts, because that's what we do here on this particular channel. We analyze the articles, the videos, and make sure that it looks similar to the price charts, because if so, then you can kind of lean on towards what the article is reading, okay, or what the video is saying. But until then, if we get any disparity between the article and the price charts, then definitely you understand that someone is not telling us the truth. So if this is your first time viewing this particular video, go ahead and like this video and subscribe to this particular channel, because literally we're the only organization that is out here trying to pretend that these articles and these price charts literally look the same, or is telling us the same story. Okay, so the title of this article literally reads, "The Smart Money Says It's Time to Buy the Chinese Internet Giants and the US FANGs." This was posted October 21st, 2018, and it was written by a columnist, Michael Brush. Okay, now he's going to go into one of the mutual fund managers, and literally this particular gentleman is stating that now is the time to buy these Chinese internet giants. Buying Alibaba, Baidu, and Tencent now is akin, just like buying Google in the early days, says fund manager Robert Simpson. So this is the gentleman that is trying to insinuate now is the opportunity to go in and buy these Chinese internet giants. Isn't it quite amusing how they have this particular individual here, the former CEO of Alibaba, how he has his thumbs up, as if that is in agreement to what Robert Simpson is saying about these internet giants, Chinese internet giants. So let's go ahead and look at a couple of highlights that I want to bring to your attention. And literally Michael Brush is piggybacking off of Robert Simpson. He is a mutual fund manager, and Robert Brush literally is stating, Michael Brush is literally stating that mutual fund managers who beat their competitors over the past 3 and 5 years would literally be the ones that he's looking to for information, recommendations as to whether or not where to put his money. So several fund managers who passed this test at beating their competitors have been pounding the table on Chinese internet names. The latest is Robert Simpson, the portfolio manager of Rock Oak Core Growth. Okay, so that's the particular firm he works for. Chinese internet stocks look attractive because they're down 30 to 40%. That makes it attractive, but it doesn't mean that they cannot go a lot further than 30 to 40%. So keep that in mind. Yes, it may look attractive now, but they can be even more attractive if it goes down to 50, 60, 70% down. Okay, so just because they're trying to insinuate that it is attractive now because it's down 30, 40% does not mean that it cannot go any lower. So keep that in mind. Now, what these Chinese stocks are going through, Robert Simpson is simply saying that they're temporary. They're only minor issues that these companies had to go through. And what he called temporary are the concerns about the trade wars with China and the slowing growth in China as well. Temporary issues can then turn into permanent issues or long-term issues if they don't get fixed relatively soon. These companies still have the potential to post phenomenal growth. The key word in that particular sentence is potential. It has not been realized yet, because they benefit from at least 2 big picture secular growth trends. So Simpson is placing his opinion on these Chinese internet giants moving to the upside off of 2 secular growth trends. The first one is the rising incomes of the Chinese because more people are becoming middle class. The second one is the fact that Chinese consumers continue to move online for shopping, banking, entertainment, and socializing. So those are the 2 things that he is placing his recommendation on. Robert Stimson also says that he likes stocks that are down for short-term reasons that don't impact the long-term thesis. These are the 3 stocks I will bang the table on right here. So literally he is saying that he will buy these 3 stocks right where they are trading now today. Okay, so keep that in mind as we look at these price charts to make sure if you would actually buy them at that particular price. Okay, so all 3 companies have wide economic moats. This supports the case that they will bounce back. They also benefit from strong secular trends that would drive above average earnings growth and allow for price earnings multiple expansion, said Stimson. These names look like simple buy and hold investments, since that is Stimson's style. So already he's telling you that to buy these Chinese companies and hold them for the long term, because once you look at these price charts on these 3 Chinese internet companies, you will literally see that there's still some downside movement to go. So that's literally why he's trying to say buy and hold these investments. And again, you guys don't see here that he does not mention how long you should hold these investments. Is it for a year? What, 6 months, 3 years, 5 years? How long do you suppose to hold these investments? That is another broad generality that a lot of articles and videos talk about. They don't tell you how long you should be able to hold these particular stocks or even financial instruments. Okay, so since that is the case, we're going to go ahead and look at these price charts for Alibaba, Baidu, and Tencent to make sure if today is a perfect time to buy these stocks. As Robert Stimson says, he will bang the table on right here. Okay, so the first one up is going to be Alibaba. We're looking at Baba on the monthly chart, and literally I went ahead and drawn an ascension line for this particular stock, and you can still see here over the last 5 months we have literally seen a decrease in price, a huge decrease in price that definitely needs to be of note. Now obviously you can tell here that we're currently closed. We still have 10 more days before the month of October concludes. $140 looks to be a simple area of support, but given the width of this current monthly bar, we definitely need to pay attention as to whether or not this $140 can be maintained. Let's go ahead and look at it on the weekly chart. And again, you can see here that Alibaba tried to move to the upside this week, came all the way up to 150, and we still got rejected in this particular space. So literally I'm still seeing some indication that this stock as well can continue to move to the downside. You just got to keep your eyes onto where support can be, and literally if this market cannot hold support relatively soon, it could come all the way back down to $110 per share. Okay, so literally keep your eyes on that particular market. It might even come to around 125 first, but nevertheless this particular chart, the weekly chart, the monthly chart, does not show it is a perfect time to buy Alibaba stock. Now let's take a look at Baidu. Okay, this is the monthly chart for Baidu, and you can see here that this last month that we're in right now definitely shows you that there is no indications of strength coming in the market. You definitely do not want to be in Baidu right now. I do expect that this particular stock has some movement to the downside to go still. 180, possibly even $160 per share is where I'm literally looking for Baidu to come in touch, especially if we end this month the way that that bar looks now. Let's take a look at it on the weekly chart, and even in Baidu you can see here that we're trying to stay above this ascension line, and we tried to break through it this previous week and we still got rejected. So Baidu is still weak. Okay, so I'm still expecting this stock to move to the downside as well. 180, possibly even $160 will be where I'm looking for support to be for Baidu. So this is not a buy opportunity according to the charts. Now let's take a look at it on Tencent. This is the monthly chart for Tencent. Even on this particular stock, we have severely seen a downtrend in the market for this stock, and $28 definitely look like a very good area for this particular stock to find support. I still think that this stock has some stocks downside movement to go. Looking at it on the weekly chart would even give you more inclinations that the strength is not yet apparent in the market for Tencent. So literally, I'm expecting some movement to the downside to occur. It might try to hold support at $33.50. Okay, but obviously it can come all the way down to 28 cents for sure as a surefire way of support to be held. So even for Tencent, the chart definitely is reflecting that this stock is not a buy neither. So out of all three stocks that Robert Stimson says he would bang the table on, right now these price charts are literally not saying the same thing. So the price charts are telling us that there's still some downside movement to go, and we should not be banging on these stocks as of yet. What is your opinion? Do you think that these three Chinese stock companies are a buy right now, or do you think we need to hold, or do you still believe that we have some downside movement to go for these stocks? We told you our opinion. We looked at the article, the price charts, and they don't correlate. So we're still looking for these three Chinese companies to continue to move to the downside. Okay. If you guys appreciate this video, go ahead and subscribe to this channel, like this video as well, and share it to those so they can also see how easy it is to predict price movement. Again, make sure you all maintain your profitability. I will see you all later.